Hey, it's Mack with PriceActionTradingSystem.com. It's Monday. It is July 13th. This will be our chart lesson for today. Um, we had a really big rally in the overnight, but we just not a lot happened in the afternoon. This is generally on a real strong day. Let me back up just a second here. Normally, a strong trend or healthy trend is about a 45-degree angle, which is more like down here, like so. And you can see this is much steeper. So generally when you get a real steep rally like this, it will not last. Um, it's just not going to, it's too steep, it's not healthy. And what will happen, instead of getting a reversal, a lot of times you will just see the market flatten out and go into a range, or maybe even correct a little bit, and then you'll get a continuation of the trend at more 45-degree angle. And you can see that trend there is more of a 45-degree angle. And so this is a much healthier trend. And it is a strong trend, even though it doesn't look like it. When you start to see lots of little small bars like that just keep going up and up and up, that's a strong trend. It doesn't look like it or appear to be a real strong trend, but trust me, it is. And so when you spot those, you definitely want to get on board with them. So having said that, what I saw was a two-tiered channel working up. We got a break here, a new high, and then we kind of flattened out. But really what happened, we kind of went into a flatter channel. There is what you could classify as a range here. I wouldn't have really traded this as a range. Uh, you don't want to go short on a real strong up day like this until you get a real strong trend in the other direction. So notice there's no shorts marked. It's all up. And I would use this support to take into account, but I wouldn't pay much attention to this resistance hip here. You got to be careful going long right into it, don't get me wrong, but at the end of the day, I don't think when you get a good setup or a trap, I don't think you let that keep you out of a trade, and you definitely don't want to be going short. So I hope that makes sense. So, but really, most of the movement was early, and then it just kind of slowed down, and the rest of the day, really from the 8:30 opening, was right in here somewhere, 2086 to, well, still that's bigger than you think it is. It's probably because I'm backed out so far, but from 2086, it was eight or 9 points probably. So, but let's back out, talk about what I saw, the trades I saw, and get through things today. So, um, early on, we were trending up here, real obvious. Um, there's even a shorter term, I don't have it on here, which I should. There's even a shorter term trend working up through here. Let's go ahead and put it on just so there's no confusion. And you can see that trend working up there. It may be just a little steeper. Looks like it's probably a little steeper than the way I drew it there. It doesn't really come into play because you should have been able to find this other one as well. You may not have found it till it bounced here and figured out there's something going on up through there. But anyway, needless to say, there's a two-tiered channel working up here, and but you got this shorter term one and a break and a couple of legs to a new high. So either way you saw it or played it, it still worked out the same. You might have stayed in this trade if you realized that this was a larger two-tiered channel. It's not a very good setup, so I didn't mark it, but it probably could be green. I'll go ahead and put a green circle around it. If you saw the bigger channel, you may want to take that on a strong day like today. And it was good for a scalp, nothing more. But let's start back here. Notice that we're working up. We get a break of this shorter term one, but it bounces. Basically, all it's doing is bouncing off of the midline of the bigger one. And it's a little bitty tiny doji. And dojis can be mixed bags. I guess that's really the best way I know how to put it. A doji can be a great setup sometimes, but then they can be horrible setup bars. In this case, no, really what you have, I don't have the line on here. There's a nice flat support right across there, a little congestion type area. And notice that you got there's a pullback of first entry, a pullback in the second entry. You don't want to take that second entry, but when you get this failed break lower, um, that's a trap, and it's a failed second entry short too because the price has tried to go down twice and failed, and it's bouncing right off the EMA. But what I like about that trade is that little bitty doji allows you to get in with only a couple of ticks risk, and generally those failed break lowers can lead to some big rallies. And I love those setups. You'll see them over and over. So that's what I really like about that one. And really what you got is you got a two-legged correction, or you got a move down, a little two-legged correction in, and another measured move down. So it's really two legs down. It's a little harder to see, and if you aren't real experienced with price action, you probably wouldn't see it. But you can see that it's not quite a measured move either because the support was too strong. But you might even measure it to right there. That makes it a little steeper, but it really should be measured from that high, oops, to that low right there. And then you measure that. And you can see it missed it by a tick or so, but that's a good sign because if it doesn't get down there, it means it's probably going further in the other direction. But it's technically, for all intents and purposes, a second entry because this is one leg, then a little two-legged correction, then the second leg. And then you got this little tiny doji right off the EMA, right off the midline, a little failed break lower. Lots of reasons to like that entry. And then you get a little slight pull back here, and you get a retest of that that support again twice. And notice how it's closing above that midline. And this is a little lower high than that one. So it's like a second entry counting off the lows. I liked it. You're going to test this high, most likely on a big strong move, probably get a new high. So I like that one. There's actually a failed second entry short here that you might have considered. Notice the new low, pull back, first entry, pull. No, that's actually the failed second entry short there. That's why I didn't mark that one. Okay. There's a failed second entry short right there as well. So that's another reason to like that one. Notice that new low, pull back, first entry, pull back, second entry. And this was like a breakout pullback long, but I just think it was a little risky right here. There's not enough room, not much room between here and here to scalp out, so I just didn't like that one. It's not a very good signal bar. Would have worked, but it didn't quite get back to the EMA or anything like that, so I just didn't like it. And then you make your new high off of this break, and then you get that correction. And unless you were looking for this second trend line off these lows, you may not find that, but even without it, there's that support right across there. Notice how that support is working right across there. All those closes are above it, and it continues to close above it. And then you get a nice bullish signal bar. What I would have done is wait on prices to break. I wouldn't have gone long above that bar, but I would have considered above this one with a limit order. That would be the only way, because this is a first entry. And you never know for sure if you've got this right until it bounces off of it and proves itself, because there's no, this is just really sets up the trend line. You got to be really good at finding these early like this. Most people, this would be where they were able to draw it. And by that time, they're probably honed in on something else over here and missing it anyway. But regardless, there's a setup there. It's just a little bit aggressive. So, but then it pulls back and gives you a second entry right here. Again, I would have waited on this bar and used a limit order when prices broke above it, and you can see you could have gotten in there. And then it gives you a second entry or failed second entry short. I think it breaks lower there. It doesn't matter. It tried to go lower once, twice, and it's close enough. It's a second entry. It's close enough to being like a failed second entry short because it's testing that EMA multiple times, and it's a little lower high there. So I like that one. If you weren't already in, to add on, and if you were in, if you weren't in, getting in. If you were in, adding on is what I meant to say there. Sorry. Um, but yeah, I like that one. That's similar to a little trap. I would have liked it better if it would have broken lower, but it still gave you a lower high there. So easy, a nice place to enter. And then now you've got your break and a move to a new high. So just be careful going long. We already talked about this one a little bit. The reason I circled it green is there's probably a little break there. It's hard to tell, but you can see that we pushed up through it a little bit, then pulled down. But there's all that support across there. This line was a little higher at the time. I'd moved it up, and you can see that's that support holding. And we did get a possible break in a new low of that little channel. But generally, you'll get two legs up. I just like that one. It's a little bit aggressive, but again, it's that small doji, and it's a bullish bar, even though it doesn't really look like it. So I like that one. And then it pulls back and it tests the origin, this lower area again here, and again, and now it's a second entry long. You're pulling back. There's your first entry. There's really a second entry long right there, but this is more flat, and this is like the little pullback, and it's similar to what we talked about over here. It's kind of a similar pattern to this. Um, there's a leg down, a little correction, then another leg down, but the support holds and it can't push lower, and it gives you a nice little bullish bar. But I would use a limit order there most likely. You could use a stop there. I'm okay with it. That's the reason I circled it blue. But it wouldn't, sometimes it's wise because there's not a lot of room between there and up here. You might need that extra tick, so or two if you can get it. And then we're working back down again. Again, no shorts here. This is all still, even though it looks kind of flat, it's still pushing uphill. Let me do this. I don't know why I've got that so small again. It really helps to see it. You can see the EMA is still going higher, and we're still pushing higher. It was tempting to enter here. There's a second entry here, but obviously you don't want to enter there. But I was afraid we would move all the way down to this line. But this support holds. But notice how there's all those dojis stacked up there, and just kind of one bar trading ranges, and then it just a little congestion, and it does break higher, and it just does the same thing. But finally, it pulls back and makes a higher low. And even though this looks similar to a doji, that could have easily closed on its high. So that's like a reversal bar. And so I liked entering then. It's a second entry counting off this low. Your first move is your first entry, pull back, and then the second entry. And you're looking for at least a measured move. I think it's about a perfect measured move up. You can see where the measured move is. It's right back to the top. And that's where you'd probably want to exit. But then you get that failed second entry short. Notice this is a new low, pull back first entry, pull back second entry. And this is also like a breakout pullback long from all that resistance across there. Broke through, pulled back, and that's a fairly bullish bar. Again, you could use a limit order here. And you got to be careful entering long there, but because it's a trap, I like that one. If this was not a failed second entry short, I probably would say no, you don't want to go long into that resistance there. But it takes off, and that was really the last trade. That was right into the 2 o'clock hour, but you could have ridden that one all the way up if you were still trading that late. So let me back out again. These kind of days, like I said, it doesn't look like a strong trend here, but it really is. We just had so much movement in the overnight. And that tends to be, the MO lately tends to be that we sell off early and we rally most of the overnight, and then we sell off the rest of the day. But that didn't happen today, so maybe something's changing. We're back up near 2100 again. So, this is the market that doesn't quit. Every time we get a big sell-off, it just turns out to be a buying opportunity. So keep that in mind. And, you can go back and watch the videos, and we've talked about this over and over. But every time we get a pretty good sell-off, all it turns out to be is a great buying opportunity. And, you don't want to buy in your day trading account. Go get you an option or something. That's the way to do it. And that way you give yourself a little time in case you're a little bit early or whatever. But something to think about if you want a way to make some money is that seems like every time we have one of these big sell-offs and people say the market's done, it comes roaring back, and those all turn out to be, and it's been that way for several years now. They all turn out to be great buying opportunities. Um, it's very different in day trading, so make sure you know what you're doing if you're listening to that. But if you know anything about options, that's a great way to do it. Buy you a low-cost option. You don't want to buy so far out that you can't make any money. But what I like to do is find some that still have maybe 60 to 90 days left on them, not much more than that, and because otherwise you're paying for a lot of time, and buy you one or two, and buy them no more than a couple of strikes out of the money. And if you'd have done that when we were way down wherever, when it was down around 20, way down in here in the 2030s, I think it went a little lower than that. If you'd have done that within a few days, we're already back to 2093. You'd have made a nice little profit there. And you don't hang on to it long term. As soon as you get some nice profit, sell it and think about doing it again. So, but anyway, that's a whole nother story. This is about day trading, not about options. And I know I'll probably get a million questions about that now. So I'm not I don't teach option trading. It's out there, but it's just something that I think people should look into. If you haven't looked into it, consider it. If you're looking for a way to get in a little longer term without all the risk. So that's the way I do it. I'll do that with stocks a lot too. I don't day trade stocks much anymore, but if I see a stock that I like, I'll start nibbling at it with some options and get into it that way. And I don't hold them long term. As soon as I get some nice profit in them, just I'm a you might even call me a option scalper. I scalp my options. You got to hold them long enough to get some money out of them. But I like to buy them when they're beat down hard and I know they're about to come back. And you don't have to stay in them very long in most cases, a week or two, and you can make some nice profit. So just something to think about. But I'm going to wrap it up for today. This is Mac with price action. Actually, before I wrap it up, one other thing. I've gotten a lot of questions. It seems like they fixed the 2000 tick chart. So if you want to go back to it, open up one. If it's looking okay with your, depending on who your data provider is, seems like they fixed it and it's not an issue anymore. And people keep asking me about it. So I haven't even opened one. I like this chart just fine. So it's not that big a deal. But I know some people get you get accustomed to something and they like it. So if you want to go back to the 2000 tick chart, if you're a data provider, if you open it up and it looks like it's got enough volume and bars, by all means trade it. Nothing wrong with that. I may end up going back to it eventually myself, but for now, I'm really liking this chart, and I don't see any reason not to use it. So it's we're basically seeing everything on this chart we could see on the tick chart. So I don't have a problem with using this and staying with it. So it's just a personal preference, really. So I'm going to wrap it up. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.